let's talk about the Union Bank also. That is reported its quarter 4 numbers. It's a mixed set coming in with PAT rising 6.5% on a year-on-year basis and operating profit showing strong sequential momentum. However, the weak core income, margin pressure and higher provisions have weighed on the sentiment even as the asset quality improved with lower NPAs. Let's talk to Ankur Mishra, who's caught up with the management on the way forward for the bank. Here's an excerpt of that conversation.
I think, yes, we are very much, concerned about that, and we are having watchful of that. So when you say that it is highest ever profit and other parameters, even other parameters which we see are one of the best during the times when the Union Bank had. So I believe when we talk about the NIA, there is a bit drop. But let us see one thing that, these results are actually the very ground level working of last 6 months. The second half.
Since you have taken over.
Yes. So first half was a bit muted one. And when I am saying it is muted one, so there was a drop of almost, if you take March Q4 of 25 levels of NIM, then from there it was a drop of 700 crores. And this last half which we have built by 600 crores. Now if we take, this is one, the another one is February 24, there was a rate cut. And then since then it is more than 1% rate cut is there if you take April and then December. Right. So if we take 1% rate cut and if we take the muted position of the first half, now the second half if you see the Q3 and if we take, observe the Q4, the growth in the business is more than 6.5% in various parameters, including deposit. Right. Now if we take that, so it means that this last Q3 and Q4, we have tried to cover for the entire year. Now, keeping this in view, if we take the NII position, so we are around 1.4% down. But I think certainly it has the transmission of the repo rate and other things. And because of the West Asia and other issues, the February and March you have seen the elevated deposit rates. So I think combined, if everything we see, now if we compare to the NIM, which was 2.91 for March 25, right. And now if you consider as of now 2.70, it is down by only 21%. And now why it has been? Because we have taken a lot of measures on the efficiency, on the efficiency recoveries. So our slippages are much less than the recoveries. Around 4,500 crore gap is there, point number one. The point number two is that the CASA and retail term deposit, where the average cost comes somewhere below 5, is around 1,10,000 crore, which we have built in second half. Right. So like this various measures we have taken, and that is why you are seeing that though drop is there, but all the efficiency parameters are working well, and they have yielded into the better profits. So 5,316 crore of profit, and dividend is also increased. That is around 5 per share from 4.75, and all the asset quality parameters, SMA and the 95% above BBB in the 25 crore and above external rating loan book. And on the retail side, 700 and above, if you see, it is more than 99.8%. Right. So I think keeping in this view all, though there is a drop, but then I think if you see the quarter 4, we are in a position to increase from here.
Right. Let's also talk about how the year ahead lies for us. You spoke about net interest margins. There's a way to look at it the way you were describing in last 2 months particularly. But keeping the interest rate scenario in mind, the way a central bank has given the commentary, you think there is a scope of further improvement in net interest margins?
Yeah, as far as the Union Bank is concerned, when there was a transmission of 1% entire year, and when there is a transmission of 0.25 from 5th of December onwards, means entire quarter, and there were elevated deposit rates during February and March, and keeping in view all those things, it has not impacted to the extent it should have been impacted. Now we could defend. I think we have bottomed out that, and from here onwards we are endeavoring, and we will be in a position to both NII and NIM. We will be in a position to improve. That is the reason we are concentrating on CASA and retail term deposit rather than more on the bulk deposits.
Right. Talking about West Asia crisis, you also mentioned there is a bit of uncertainty currently. How are you seeing the situation on ground and the impact on business?
Yeah, I would say two, three things in general, not as a union bank. We have talked to a lot of customers and prospective A2B existing customers as well as new to the bank, and what we understand is there is a working capital cycle elongated because of the goods which were coming as an import through Hormuz Strait, and then now coming it is taking 35 to 45 days longer duration to reach the destination. So that is one. Second is the energy specific sectors, and certainly the crude has gone up. So it is, I believe it is a more of a cost shock. So the cost is probably will increase and the delay in the working capital cycle. So I think when seeing this and then energy specific, which were on the gas, it was a last 1.5 month in the February March there was an issue on the gas side. So I think there are some clusters like Morbi, like ceramics and cement and all, which are not very big players. So there we have seen, yes, there was an impact. But now coming to Union Bank, our exposure, direct exposure to Middle East is around hardly 2,910 crores. So we do not have, by our monitoring each, we have not found any stress in those. And it is hardly 150 or 200, which is in SMS 01 only. So we have not seen any specific stress on those. The exposure is not good, but then we are monitoring entire exports and imports. The imports is, yes, remittances, and the total inward remittances are down, which we have seen. Probably it is a industry as well as perspective it would be. But then as of now, we have not seen, because the government of India as well as the Reserve Bank has come forward with various measures. And what has come in the Jan Samarth portal, out of that around 180, around 200, we have already sanctioned and disbursed. So we are keeping in line with that, and we are talking, and wherever the need is there felt, we are giving that sort of relief. Even in the RBI relief measures, we have received around 59 applications, right, and we have worked upon that. So I think as of now, we do not foresee as such that it is some stress, because already relief measures has come from Government of India and the Reserve Bank, and all the banks are moving ahead in that.